Andrew, welcome to the show. Thanks for joining us.
Yeah, it's good to be here.
Do you want to start by telling us about your earliest days in business and where the spark for it all started?
That's a long story, but a short version is I was a misfit and my earliest days weren't in business. My parents wanted me to be in medicine. I did quite well at science in England, so I did a year of medicine, dropped out, did a year of applied biology, London University, dropped out, emigrated to Australia, had a restaurant that did all right, made money. I'd hardly call it business, and then was an actor in the Shakespearean NIDA kind of company. So I think you'd say that I then ended up joining a big corporate, American corporate, back in England, doing the North Sea oil stuff, recruitment. Brown & Root, now known as Halliburton, one of the largest construction companies in the world. So I was a pretty straightforward HR personnel guy who did a lot of recruiting. And I think what I saw when I came back to Australia in 1980 was an industry that needed a bit of an upgrade.
Okay. So business wasn't always where you were going to end up, or it was?
Making money was always where I was going to end up,
Okay.
but not business.
Okay.
I think there's a distinction. I was definitely a young, ambitious Englishman who, living in London, could see a lot of successful people around me. And I thought I'd like to do something that I can be successful at and also have the independence that making money brings. But I wouldn't say I started off life as a dyed in the wool business guy. No, I think I was very confused. It was about 28, 29 that I went, yes, now I know what I can do.
Okay. And so you wouldn't describe your pathway as a typical pathway into business?
No.
It was something that evolved as a professional in that industry, and then the opportunities came later.
Yeah, but apart from that, Morgan & Banks did become the largest recruiting company in Australia by a margin, 17%. And I don't think any country's ever had one recruiting company that had 17% market share. But I always find the interesting story of that was to do with the fact that I was a misfit. And so was Morgan, in the sense that we were late starters. And if you'd said to me, we're going to judge you on your resume at the age of 28, 29, I would have gone, oh, not a good idea, because if you looked at my resume, you wouldn't give me a job, or you wouldn't know what job to give me unless you got inside my head. So what that meant was when we started Morgan & Banks, we changed the tone and the language towards candidates. We were the first to make it much softer and far less about the employers up here and the candidates down here. We made it much more of an equal playing field, which of course it is today. Good candidates are just as important as finding a good job.
Yeah. And from your perspective, that paradigm that you bring to the table, presumably that influences everything you have done. And even in terms of investments you make today, looking at people to invest in, founders, that skill set is obviously critical to your decision-making process.
Yeah. Your investors, people listening in would say, I look at the balance sheet and I look at the CAC and I look at the customer traction and I look at the growth and all that thing before I invest. And I do all of that. But I also speak to the people driving it. And because I'm an interviewer and I've done 40,000 interviews as a living, I believe that I, within 15 to 45 minutes, can tell you a little bit about how they think, not what they used to think about, which is the rear vision, the resume, and the P&L. And the typical pitch deck you get with an investment is usually half looking back, half looking forward. But then I want to know how you're going to execute. So I'm a bit of a fan on really drilling down on questions that get me to understand how people think, not what they used to think about.
What are the defining traits that you're looking for when you're asking those questions?
They've pitched me something. It's got lots of hooks and statements. We're going to do this, we're going to do that. It's tech, it's this and that. So then I go looking for each of those stakes in the ground and I make sure that there's detail and traction around them. So if they've given me a TAM of total addressable market of 500 million, I ask them to break it down for me. And which do you think's the low hanging fruit? And so I see those meetings as like a crime scene. And I'm pulling in the data. I'm like a forensic scientist, and I'm analyzing what they've said against how they think about it and how they define it for me. And I'm looking for a nice resonating sound that is a tick, not a cross.
A discrepancy where you can see the questions.
Yeah, you
Yeah.
just said there's a TAM of 500 million. You can't describe it to me. Bit of a problem.
Yeah.
How are you going to get there? What's the tech stack like? What's your typical customer? What's your experience? So I'm a big fan of open-ended probing questions.
So in terms of how you built your business, and you built a very large business in a relatively short amount of time from
Morgan and
what
Banks
I'm
was 1985. We floated in 94 and we merged in 98. So it was a good 15 years from beginning to end, but it got to $1 billion.
Yeah.
It got to $1 billion in revenue after 15 years. Yeah.
Yeah, no small feat. That's a huge business in a relatively short amount of time.
Yeah. Okay.
That's to anybody. So to do that, was that what your objectives were to start with, or did that surprise you how big the business became?
No, it wasn't our objective. We thought we might be 12 of us, 20 of us, play golf on Friday afternoons, have the quiet life. We often laughed about it. What happened to that? Hello. It's going to be because typical recruiters in those days, if you were good, you could bill $1 million, take $500,000 home. And in the 80s, that was a very nice standard of living and lifestyle. But then I think we got consumed. The success and the momentum actually took over. And we realized that we had a tiger by the tail. We were just like the early accounting firms rolled up and became the big 4 or 3 and the early law firms. We were basically doing that for a service business in HR and recruitment. And we could see the momentum. I can remember thinking about 94, 95 when we went public that we were hiring 50 people a month. We were hiring for us. Yeah. So you can imagine that's a production line. So no, I think we got consumed in a positive way by the success. We were onto something and let's go with it.
What was that process like when you're in the middle of realizing that this is bigger than you thought and you are being consumed by it? And to that, and you said have a tiger by the tail. And to that point, I interviewed yesterday Erin Deering, who built a business in Triangle in the bikini, that sort of business. And that became huge. And she described very similar things in how quickly things took off. And she found it hard to manage that because of the scale and size, and probably would make different decisions. What were the decisions that you made, I guess, is what I'm getting to, that made it work?
Because remember, we were in a unique position that every day, myself, Morgan, Ian Burns, another important partner in the business, we interviewed successful people like you, and we asked them questions, and we saw business models across every discipline. So we asked a lot of questions about scale and delegation. But I think the first thing is there wasn't just Andrew Banks. There was Andrew Banks, Jeff Morgan, Ian Burns, and a few others. It was a team effort. I'm happy about that, and I'm totally accept that I couldn't have done it on my own. I don't think Jeff could have done it on his own, and nor Ian, but together we were a pretty formidable team. So it wasn't just one entrepreneur struggling and doing it all themselves. But I think we bounced off each other. And then we were in the business of asking CEOs and leaders open-ended questions about what not to do and what to do. And we copied a lot of successful business models around us. The key thing, back to your real core question, though, is we had, after about year 4, we had a meeting and we said our job is to delegate our job every 6 months. So we created this concept in our head that we promoted ourselves up a level every 6 months, create a level behind us, promote yourself up a level. And then you look back and suddenly you're in 32 countries with 4,000 people. It's surreal when you think about it that way. But that was by the time I got to New York and we'd merged. Yeah, I think it's, what do they say? Success by the inch is a cinch, by the yard it's hard. So I think—
I haven't heard that.
Yeah,
Okay,
one step at a time. And mistakes, obviously, along the way, but quickly correct mistakes. I'm a big fan of repeating successful actions. And by the way, just so I don't gloss over it, we were fanatics about a dashboard for our business long before that became sexy. So I could tell you, not on my phone, because I didn't have an iPhone in those days, but I could tell you on Saturday morning, because all the sheets had been faxed in on Friday night, how many candidates we'd interviewed by discipline, how many candidates had been put up to clients, how many clients had agreed to interview them, how many shortlisted candidates, how many placed, average fee, and also sales activity by team, by office, by country.
Yeah. And no vanity metrics in amongst all that. back then it would have been all the important stuff that you needed to know, right?
Yeah. And by the way, not as we told people on the way in on the interview, you've probably heard Morgan & Banks is a micromanager and we're all fanatics. Just understand this. We do that so that we can help you grow. Because if we said to you, Andrew, your budget's 50 grand a month or 100 grand a month and you make it or you don't make it and we fire you, we think that's really bad leadership. However, if we know what you're doing and what's working, we can guide you to do more of what's working. And if we know what you're doing, working hard, but you're not getting the dollar return, we know how to correct that, because that's why we're experts. And so you need to understand that we fold your parachute, we used to say. When you join us, we fold the parachute, you jump. And then when you're an expert after 6 or 12 months, you can help folding the parachute. But until that time, trust us. And remember, we're hiring qualified accountants to learn how to recruit accountants, qualified engineers who've never done it before to recruit engineers, qualified salespeople, and so on.
You described yourselves earlier as fanatics. How important was that? And describe what you mean by fanatic.
I think we're intense. If you're going to do something, do it really well and do it under a microscope. I'm a bit of a scientist. If it looks like a duck and it's quacking, it's probably a duck. And we're very focused on that. And why do something half-heartedly? Why do a sloppy interview? Why do a sloppy sales call? Why, if you've developed a script, which we had to pick up jobs over the phone, and that script works, why not train all your people on that script? They literally have a script. It was like, those song, where you've got a song and the ball is bouncing on the words. We literally had sales scripts for our people so that and even to change the intonation of their voice and how they presented. Because if you're a recruiter and you're ringing up and you sound boring and dull and mumble, you're not going to pick up the job. Whereas if you've got a very clearly defined with open questions, ready for objections, suddenly you're listing the job on the phone and you're off.
Yeah. In terms of growth of the business and expanding, you would have looked at and had the opportunity to raise capital along the way and look at those various alternatives of how you do that, whether it's private equity or whether it's listing. And obviously you did list at one point. Take us through that thought process and the considerations that were important to you as to which paths and why.
So my early experience is service businesses, which are not very thirsty for capital. So we were self-funded with an overdraft, which we hardly ever used, and we were cash flow positive. However, as the business morphed from permanent recruitment, which is where you do a job and get paid, we also got, remember, about 480 million of that billion was what you would call temps, but they weren't sort of entry-level temps, they were temporary executives. And that sucks capital because you're paying the executive and then sending a bill out, and there's always a bit of a lag. So we funded that with overdraft and other facilities for a while. We had about 20 shareholders as a private company. Jeff and I had the most, 90%, but the rest so we created a unit trust. That was not so much about the capital, but equity to keep people in.
Yes.
And then, of course, in 94, we went public. So that was raising capital, and we did that for expansion. And that's when we grew rapidly from, I think our revenue when we went public, it's probably in an old IPO prospectus somewhere. I think our revenue was 56 million in 94. So you're right, actually, it was fast growth, wasn't it? Because I know the accounts in 1998 before we merged were about 946 million. And so that was the huge growth of the temp business. So going public was the way we raised capital. Today, with my investments, obviously we raise capital in lots of different ways. And I think, like anything, the cost of capital is something that's very important to get right. And also the mix of structure, equity and debt, because my only problem investments are ones where there's too much debt. And that was because you're paying for previous mistakes.
Yeah. And in terms of the listing, you want to raise money, would you go down that pathway again if you were to go back in time? Not that there's any point in doing those sorts of things, but you look at that and for other people?
In those days, there was no real private equity market, VC market. So it was one way of monetizing your business, but not exiting overnight. But clearly, it was frankly one of the ways that you got some of your founders' capital out. Today, I think it would depend very much on the business and on the CEO. But I would say don't make that decision lightly. And I've got a few investments when they say, oh, maybe we should go public. And I go, if you go public, you don't think you're going to go public, your share price takes off and then you ride off into the sunset within 18 months. Ain't going to happen. So if you want to go public, go for the right reasons. You're going to be there at least 3, probably 5 years. You've got to have a succession plan. You've got to have a proper board. You've got to have a growth strategy. And that's because you feel your cost of capital is good, but also the benefits, for example, rather than having a big PE or 2 or 3 PE firms on your board, is that you retain control. I had control, Jeff and I, it was a public company, but we had 3 non-executive directors, but we had control because we had more shares than anyone else, within reason. Obviously transparent, but so I think you've got to think it through. If you really are trying to exit and you've built it to a certain point and you want to sail off into the sunset or do something else, you're not going public. You're going to do a trade sale.
That's a completely different scenario, right?
Totally. Yeah.
And like you talked about, though, still having that succession plan in terms of your listing, and then obviously a few years later, there was a substantial exit. Was that part of the process in the planning when you did that?
Yes. And you know what? I learned from YPO, WPO, I belong to that. And I would say to any of your listeners who are running private companies who are thinking of exiting within 3 years, stop being tight-fisted about building up your management team, because it'll cost you in the long run. Because if you want your value of your business to grow, and they know you're leaving as a founder or as a CEO, you need to have a strong management team behind you, because otherwise they won't pay you as much for your business. So invest now 2 or 3 years ahead, instead of trying to save a salary here or save a salary there. And so that you can say to any prospective purchaser, I've got a solid team and they don't need me.
Yeah. And I think that's something that a lot of people probably are reluctant to do until they hear something like that from someone who's done it. Because people want to keep things lean, people want to keep control, and there's all those other types of things. But the one thing you hear from people on the other side of that is that there's a whole heap of structure that needs to go around that when you do that process.
Yeah. And as a YPO, WPO member, that's Young Presidents Organization, because I was a member and an entrepreneur, I was able to look entrepreneurs in the eye and say, look, I've been there, I know what you're doing. And if you really are serious about exiting or growing, you've got to invest in your management team to give you the scale and the depth you need.
Yeah. Andrew, what was it like when you finally, there's a takeover and that business you built sort of from scratch is now being bought by somebody else? What was that process like?
It wasn't a complete takeover, it was a merger. So we floated. We learned to partly let go when you go public. And then we merged with a company that was about the same size as us in the US.
Oh, okay. Yeah.
And they had monster.com and we had the Job Hound. So that was the beginning of really jobs online. And Jeff and I were the 3rd largest shareholder in the merged entity on the NASDAQ. Hence why I moved to New York. And my kids came with me and never came home. That's another story.
Yeah, right.
They live in LA. So I think it was a progressive letting go rather than it's mine and it's private one day and I'm out the door the next. It wasn't that sudden.
You say that's another story, but I would like to ask a question about that, because that's something that everyone faces at some point in their career, right? As to there's the next big move, whatever it is, whatever level you're at, the next big move involves biting the bullet and going overseas or shifting your family or doing something like that. What was your thought process there as you did that?
I was 50, 52 or something, and we had a family meeting. I could have stayed in Australia, but the opportunity to move to New York meant that we could go and do a bunch of acquisitions and go global, which I did. I did 61 acquisitions in 18 months.
Yeah, right.
And that's how I got to 32 countries and all that stuff. I did what any sensible dad would do in that situation. I talked to mum. She makes all the important decisions. And then with her support, we had a family meeting and they all went, yeah, let's go. And they wanted to go to university in America. So it was a fantastic time. We lived in Manhattan for 3 years, LA for 5. But of course, there are consequences of that, which is your kids become integrated in the society in which they are moved to, and you run the risk that they won't come home, which is what happened in my case. But I'm the pommy immigrant who left England, and my 5 brothers and mother and father came to Australia. So maybe it's karma.
Yeah. But I find that really interesting, because how old were the kids roughly when you did that move?
They were undergraduate age. So my son went to Boston University. My daughter had done a degree in Sydney, and she'd finished that marketing and industrial relations at Sydney University, and then she went to NYC. So it was basically, they were at university age, they were looking to leave home and spread their wings anyway.
Yeah. But that to me is fascinating because they're those sliding doors moments when, as a family, you end up making those decisions. And
Yeah.
it can go either way, right? Because
Yeah.
there's a lot of considerations. Like you talked about that family meeting. Oh, we've been in that situation. We came
Yeah.
from country WA. We had one of those where we moved to Perth when the kids were
Yeah.
young. And then we
Yeah.
had another one when we moved from Perth to Sydney when they were a bit older. And plenty of people I talk to have been in those positions and never made that choice, and they've chosen to stay.
Yeah.
And there's always that, what if we had have done it, or what? And so
Yeah.
I find that
Yeah.
really interesting when you meet people who have done it, which seems obvious when you do it because you know the reasons you do it for. But plenty of people don't bite the bullet and don't do it. And often there's elements of what might have been. So I find that really interesting.
Yeah. I'm the opposite end of that spectrum. Remember, I'm the 20-year-old who's dropped out of university, hates what he's doing, feels England's negative and 3-day working week strikes. And at 20, I come to Australia on my own. I'm the 10-pound pomp. As I like to say, Australia got a bargain. If you could see my tax bills. Anyway, so I think when you're 20 and you leave and go to another country on your own, the idea of leaving that country and going to a third country or fourth country, it was, to me, I didn't see it as a big deal. I was just following the business model. The idea of merging with a NASDAQ company and growing the internet jobs online business. Of course, if I knew what I knew now, I probably should have merged with the Sydney Morning Herald and created Seek, because that was 2 years before Seek was invented, which is now worth 8 billion, I think. So anyway, interesting. But no, I think family choices, at the end of the day, all entrepreneurs, all investors, we're people, we're human beings first, we're family members first. The business is just part of our lives. So why shouldn't there be a conversation and make sure that the decisions are integrated?
Yeah. How do you define success from a business perspective, but also more broadly in life?
I think you're right. It's a tricky definition because some days I feel successful and other days not, because I think, wow, how did I miss that? That was right under my nose. So I think overall, are you happy? Do you feel fulfilled? Are you positive? Are you helping and supporting and making all those around you in your family and in your environment better and more uptone? That's a good sign of success. And obviously personal health and well-being. You can see people who are stressed out and negative, and it impacts on their health. And so I think, but success is a very relative word for each of us. And I think it's very time flexible. I think you could get me at certain stages of my 73 years and I would be more successful or less successful depending on when you stopped and asked me the question.
Which is your own perception.
How do you feel about yourself and whatever? Absolutely. And so I'm generally a glass half full. I think I was born in 51, so I've got parents who've still got memories of the war. And I've got 5 brothers, 4 of them older than me, 1 younger. And so I definitely grew up in a family in England, which was, look, if you're not being shot at and you've got food in your stomach and somebody loves you, you don't really have a problem. Maslow's hierarchy of needs. Losing money in business or failing because part of your business didn't do as well is certainly not hurry-curry material.
Yeah, it's interesting, that perspective, right? Because I think some of that's been lost over the years, probably because we've had it all so easy in many respects. Just the absence of some of those more traumatic experiences, we find it other ways to become concerned about things that don't necessarily matter so much. So I find those perspectives quite grounding, and I think we probably need a bit more reminding of it.
Yeah, and I think sometimes it's a bit depressing when you watch the 6 o'clock news on any channel these days, because one's reminded how in various parts of the world, things are a lot worse than they are in our own backyard for all sorts of reasons. I tend to reflect on that and go, oh, how lucky are we?
Yeah. In terms of, you've had that success. Where you went to New York, then obviously to LA.
Yeah.
And then what's happened in between there and the next business, Talent2?
Talent2 was before I moved to LA. Talent2 was after New York, came back for 2 or 3 years.
Oh, okay.
And Talent2 was sort of 2004 through to 2014. So that was a backdoor listing of a payroll company. And I got the idea from living in New York when outsourcing suddenly became very sexy. And I decided, why isn't there a public company that is an outsourced HR department? So what does an HR department do? Hires you, trains you, pays you, fires you, manages the process. So that's really what Talent2 was. So we said, we don't know anything about payroll, so we better buy a payroll business. And we found a company that had really good technology, but it was unprofitable. And so we did a backdoor listing and then put recruitment and training and outplacement into it. And then it was pretty good. It was 16 million and losing money in 2005. And in 2007, it was 400 million and making 32.
Okay.
And then 08 and 09 happened and I privatized it, and it had a bit of a bumpy ride like everybody did after the GFC. But I then sold it in 2014, and that's when I moved to LA again. So I had the 3 years in New York with Morgan and Banks, and then the 5 years in LA more as an investor. So that was where I did my US investing. I'm an investor in ABC Mouse, Juvenescence, a few things. They're both hopefully unicorns very soon. ABC Mouse might be next year. And then I did a bunch of smaller investing. I'd go to the Milken conference and things like that and talk to people smarter than me and say, what should I do with my capital?
When you went into that next business, Talent2, how much of an advantage was it having done it before?
No, I think it was a big advantage. It was a big advantage because you hopefully didn't make the same stupid mistakes you made before. Right. I knew how to run a public company, so I structured the board in a sensible way. I was chairman the second time, not CEO, but I was an executive chairman, so you could argue I was a bit of both. And in many ways it went better, and in some ways it didn't go as well because I wasn't as hands-on. And you can reflect on that till the cows come home, but the business had its own journey and ended up in a positive way. A big American company bought it and it still exists today as Allegis. It's not Talent2 anymore.
Yeah. You've got the acting background and the interest in the arts. How important is that in terms of your perspective on business? Does it give you an edge that others don't have in some way?
It does in some parts, but being a public company, you have to present. You can move the share price if you do a persuasive presentation up or down. So I think it gave me confidence about my message. And I think probably the most powerful part was not moving the share price, but probably on my staff. Because if you mumble to people and you think it's not really going to go that way, it's not very impressive. So I think I felt when I was communicating with people like I am with you now, it's my job to get the message across clearly and persuasively and positively. And we had sales meetings every Monday. We had end of week meetings. In the end, in Grosvenor Place, when we had 2 floors, I might have 300 people. Down in Melbourne, we had 600 people in 33 Collins Street. I would be standing in front of our staff at least once a week, if not, winding them up, telling them where we're going, and hopefully instilling confidence. So I think presentation skills are very important. And here's a plug, but it's a not-for-profit plug. I'm on the board of NIDA, which is the National Institute of Dramatic Art, and they do weekend courses for corporate development training. I sent my CFO from Talent2 there, and he did the presentation 2 weeks later, and the share price went up 10%. So we always joke about the fact. So communication's the universal solvent. You've got to be able to communicate well. Part of acting, I'd say, is about communication. But there are lots of ways. You don't have to be an actor. Just go to a NIDA weekend course, a presentation course, or they'll do tailored courses for any corporate. And they're a not-for-profit. They're basically part of the University of New South Wales. And I can't tell you what a modest cost that is and what a huge investment it is in your people.
What was the best advice you were ever given along the way? And the second question, part of that question is, what advice would you give to people in business today?
I think the best generic advice is be interested, not interesting. Be curious about the person you're talking to and the person you're engaging with, whether it's a client or your prospective wife. Ask good questions and be interested in them, because if you just talk about yourself and you're terribly interesting, most people switch off after a while. So I think that's good generic advice. In terms of overall business, I think I'm a great believer in what I call the power formula, which is a sort of concept of you strive hard to be successful and people help you along the way. And the worst thing you can do is separate yourself from the people that got you there. And I think in normal language, we would call that arrogance, hubris, and being aloof. So the more successful we became and I became, the more I worked at removing layers of pretentiousness and of pride and being as humble and as open and as authentic as I could. And frankly, I was happier that way, just being who I am, talking to people like, and being vulnerable sometimes. I can remember many meetings in Morgan & Bank saying, guys, I have no idea what to do here. Anybody got any suggestions? And it's not often you would hear a CEO admit to that.
No.
But I think that's a good thing. Why should we have all the answers? We just happen to be in the position of leadership or ownership or whatever it is. But being vulnerable, I think, goes down well with people who really care about your business and you.
Quite disarming, actually. Even just hearing you say that, I was like, oh, okay. But it's a really interesting thing to hear from somebody.
Yeah, exactly. Jeff Morgan used to say, 2 ears and 1 mouth, do everything in that proportion. That's not a bad little one either.
Absolutely. In terms of people and where the industry is at the moment, I don't know if you're still involved in the industry itself in terms of broadly recruitment people. It's all people, I guess, at the end of the day, however you're investing. What are the differences that you see today compared to 10, 20, 30 years ago?
That's a good question. I am involved in a business called Compono.com, which is, it does a bunch of things for state governments in licensing, renewal and training, which is its biggest part of the business. But a small but growing part of the business is culture matching. So in Morgan & Banks, if I'd gone to a company and they said, we're really having trouble finding people, the resumes don't match the jobs, or this is a new kind of job, and we don't know how to go about it because we can't do traditional recruitment around the resume. What can you help us? We did Macquarie Bank, Bankers Trust, Lend-Lease. We'd go in, we'd map the whole leadership team, and basically we'd give them a template of their culture. So we'd say to Lend-Lease, this is your culture, this is problem solving, this is what's going on inside their heads, nothing to do with the resume. And so we were able to help them find candidates that we used to say look wrong but are right. In other words, they look wrong on paper. You wouldn't have given them an interview, but they were a 96% match to their culture. Right. So now I'll have a chat. Now, the great thing about Compono, that used to take a month and cost $100,000. Now with software as a service, you can do this in probably less than an hour. You send out a survey and you can compare it to each department. I call it culture matching. And in today's world with AI dislocating a lot of jobs, the resume is going to become less and less relevant to many jobs. So you've got to have a quick, efficient way of matching the brain chemistry of these people without having a time-consuming interview. So the key thing is you put this filter at the top of the recruitment process. So in other words, before you even open the resume, you're being told this person is a 26% match to your culture and way of doing things, or a 96% match. Now you open the resume and make the next decision, and then you interview or you don't. And I think that's brilliant. And that's one of the ways technology is making it faster and easier to recruit.
Yeah, which makes complete sense. You've only got to look at sporting teams that are the great sports teams that have that culture where they recruit based on, where it's obviously smaller groups, so you can do it more easily and in person. But the impact of having the right people come into a small team in sports, that in the longevity of the team and and the success. So it just makes sense how important it is to get the culture right, the culture matching part.
And when you ask companies that are struggling, how do you recruit? And they give you whatever they say, it unfortunately comes back. They're still looking at a resume and making a decision, and they're not changing anything. And I go, how can you read someone's brain chemistry from looking at their resume? Explain that to me. And they can't. So they don't realize they're cheap, fast, effective tools now that really give them a head start.
Does the resume start to become, I guess not irrelevant, but does it become less relevant, or is it just one part of the component these days compared to what it once was, perhaps?
If you're looking for a structural engineer, it's pretty relevant because you want the bridge to stand up, or a doctor. But I think for many roles, it's only partially relevant. And by the way, even for the engineer, the structural engineer, you still want to know that they're a good team player. So in that situation, you want them to be a team player. You've got two structural engineers, one's a 78% match, one's a 30% match. You're going to do different questions during that interview, and then you find out the 78% match is much more compatible to your style of doing things. They've both got the same degree and the same resume. So there's tick. You've hired the right person. People focus too much on hiring, not making a mistake. I think the holy grail is like the iceberg. It's below the waterline. If you've got all
Yep.
these people milling around the workforce whose resumes no longer look relevant because AI is throwing them out, etc. So now you've got to recruit on culture and on match. So they are the candidates that I said earlier look wrong, resumes not a
Yep.
fit, but are right. And you know the great thing about them? You've given them a chance. They're cheaper, and
Yeah.
probably more loyal. As long as you can train them up, you're golden.
Yep. Yeah. Okay. Yeah, that's fascinating. That's really fascinating. The AI and work and jobs and all that sort of stuff. Do you have a sense of just how different that's going to make the workforce and jobs more broadly?
Yeah, I just read something today that predicted 2027 as the defining moment when it flips.
Yeah.
I think, look, it starts with making routine tasks more efficient. We know that already. We're seeing it happen. Look at how maybe this podcast is being noted. I've got it for a Zoom call this morning and I've got the notes already as soon as
Yeah.
I hang up and all that. So all of those things make us more efficient. I think that means there'll be a bit of pressure on entry-level jobs and untrained jobs. If you think of knowledge as tacit, what you learn on the job and experience, and explicit, which is theoretical knowledge, the AI puts a lot of pressure on just pure explicit knowledge. So the raw graduate, they want more tacit knowledge, which is the experience of a more seasoned player. That helps. But I'm overall optimistic. I think while it'll destroy some jobs in areas where human beings probably don't want to be working for the rest of their lives anyway, it'll create new ones and new industries, or maybe make us so efficient that in 20 years we're doing a 3-day week. I don't know. So I have to be overall. I take the view that we're human beings, we control the planet, so it's up to us to make sure it goes right, not goes wrong.
Yeah.
So I'm not a Terminator 3 fan of AI.
Yeah, okay. I'm with you on that. I think there's some fascinating stuff that will come out from all of this, from the way it changes our lives, the way it changes business. I think that'll be fascinating. The existential threat, I don't know the answer to that. That might be 20 years away, 30 years away. We'll see what happens. But in the meantime, it's going to be a fun ride.
Yes, it will be.
What about people in business that you've known over the years that you've looked at as the types of people that inspire you, if that's the right word?
I think I've been asked this question before, and I decided I'm a student of 1,000 mentors, because literally my week for many years, for 25 years, was interviewing 10 to 15 people, usually smarter than me, who are running businesses, either to find them someone, because if I'm finding a CEO of a public company, their new CFO, I've got to get inside their heads and whatever at the senior end, or because we were doing business with them, or I was interviewing them for a job. And I learned a lot from various people, open-ended questions. So I don't feel I have one kind of model or one kind of name that I could say was the best CEO, because I think, like me, all CEOs are flawed. They would all have some things that were really good about them and some things they'd look back and go, I could have done that better. Steve Jobs, bless him, if he was still with us, would say the same thing. He had an amazing career and has changed the world, but boy, did he have some bumps in his road.
Yeah. In amongst all of those conversations that you've had, were there any that really surprised you or that really just weren't what you expected? That's a bit of a left field question. When you've talked to that many people, there's bound to have been times where you've just turned up to a conversation and it's just surprised you with the content or the take that the person had. Is there anything that sticks with you in that way?
I think mostly it was about their business models. I'd gone in and I'd assumed that they had a particular business model. And I think I often actually got surprised by CEOs who revealed the iceberg again, that what I was looking at was the tip. And there was a whole area of their business that that I couldn't see. And I'm involved in a business. I'm in a startup at the moment called Lyres, Lyres, which is the non-alcoholic product that was invented in Australia, actually, by 2 Brisbane boys. And it's now in 43 countries and it's going to go global.
Wow.
And you would think that non-alcoholic business would be about people who don't want alcohol and sugar. And you would be right. That's the tip of the iceberg. But you know what that business model discovered? There's 500,000 non-licensed Mexican restaurants in the United States alone. And if you don't have a license, but you'd like to sell a non-alcoholic tequila sunrise, that's a very high margin business. All of a sudden, you just wouldn't believe. Now you are in the business of providing and so there's a great
Fascinating, right?
example. And I think there were many. And so Macquarie Bank surprised me. You'd think, oh, they're just a bank, wholesale, retail. No, they're going into funds management and they're going into infrastructure management. So I think the surprise was more, wow, I walk out often thinking, I thought Lend-Lease was in this business and actually it's in 3 businesses and so on. That was always fascinating.
What do you love most about what you do now?
I love most about what I do now is that I can say that I'm still learning and growing. What's that saying? If you're ripe, you rot. Sorry, if you're green, you grow, and you're ripe, you rot. You don't want to be ripe. I never want to be able to say I know it all. So I'm learning every day. I have total freedom. One of the privileges of being financially independent is that you can choose your day and your life and the structure of it. That's a great privilege. Because of my age, I'm a biohacker. So I spend a fair bit of time actually working on this thing called a body that takes me to meetings. And I'm doing a number of things that theoretically should slow the aging process, both mentally and physically. So I actually invest time, not just exercise and diet, but I have a program where I invest time in that. So I like the fact that it's a balance and not too much stress.
Andrew, thank you very much for your time. It's been a fantastic conversation and look forward to catching up again soon in due course.
Yeah, thanks. I enjoyed it and I hope your viewers get something out of it.
I think they'll be very interested.
Take care.